All right. Okay. Good evening, everyone. So, welcome to this week session over here. Okay. As usual. Hey, I do see some questions coming in already. That's great. What we'll do is I will go through the markets first, right? And then I do see your questions, so I'll be answering them after we went through some of the lists here that we want to look at. Okay. So yeah, so I see questions just to acknowledge. I do see questions from Joseph. If I pronounce your name correctly, I do see a question from Caffeine as well, and then Irene. Good evening, right? Okay. So let's start off this week's session. Okay. Generally, I would first say that this month has been overall pretty slow for me. I think generally market doesn't really move much, right? Especially in the things that we're looking at on the dollar side of things. There are quite a bit of a slower movement, a bit of a consolidation as well. Okay, so just need to be a little bit patient as of this period. Because the markets basically is after every consolidation, eventually we'll see some momentum coming back in the market, and that's where we want to be prepared. Okay, so let's talk about the euro dollar first. Currently, the view here on euro dollar is that we are looking at a possible five wave structure from wave theory. Okay. So of course, with that perspective, very quickly we can see that this is the low, right? And then wave one, wave two. Currently, we are in a wave three development, and the typical wave three development expectation is for the price to heat towards the 1.618 extension. So that will put us around 1.179D, right? Um, there's a little bit more upside here, so we just basically need to be patient. And if this kind of move up towards the target correctively as a potential diagonal, short term, perhaps we can look to trade it back down as a retracement as wave four. And then within wave four territory, we then look to trade it back up, right, to the upside. Okay. Of course, the dollar has been weakened quite a bit since, I would say late last month, early this month. So eventually, we do always expect some sort of a pullback or retracement, right? Even if the market has a very strong trend or direction, oftentimes we'll still see that retracement. Okay, so that's the take on euro. Generally, the structure seems pretty clear. It's more of like waiting for price to enter into a key area, then look out for a potential setup that we can actually capitalize on. Okay, GBP USD over here, I would say they are kind of like very similar to the euro. Potentially, we are looking at wave three here, may have completed, but of course, if this just continue to push higher, right? Wave three can look something like this, okay? Which means understanding the correlation between the pound and the euro, we are able to then take some clues from the euro as well, right? Because if the euro is likely going to go higher, there's a very good possibility that the pound here may still see wave three in development. Right. So if I also put in the FIB extension for your reference, we do have the 1618 being tagged, right? But that doesn't necessarily mean that price needs to complete wave three there, right? Because sometimes wave three can be what we call an extended move, right? So in this case here, maybe I'll just darken this a little bit more. Wave three can still be extended and proceed to go towards the 200 extension, right? So if that's going to be the case, in this case, with today's movement, there's a good possibility we'll see a little bit more push to the upside, right? And of course, the internal here is that this can also be a five-wave diagonal structure, right? So a lot of all these details may not be the most significant aspect, right? But just to kind of highlight over here the possibility of this development. Right. So overall, once that is completed, then we'll see wave four, and then of course, very similar to the euro dollar, we can look at wave five after which, right? So the area of target here, or I'll say the key area that you want to keep an eye on, is around 1.3450, right? Obviously, if we can see some sort of a rejection over here, which very highly possible because we can see again the diagonal development. Short term, that opens up a possible retracement trade to the downside. Okay, now if you are familiar with momentum indicators, this is also sort of a confirmation. You can see that we have the RSI coming down, so price is going up, RSI is coming down. That serves as a divergence. Okay, so things are starting to align, right? You just need to keep an eye on the key levels as we mentioned. Okay, so that's on the pound side of things. Then we have the Aussie. All right, so Aussie dollar as of now seems to be starting its retracement, right? Early sign that this retracement seems to be starting. Okay, as mentioned, every market, whether is it uptrend or downtrend, if it's overly extended, oftentimes you want to be careful because the retracement would likely follow. So you can see Aussie dollar is really extended over here, right? So that's why right now we're kind of expecting the pullback. It may have started. Now, to be very, very honest, if I'm going to be more conservative, I would love to see price take out that low before really committing to perhaps some sort of a short-term retracement pullback trade. Okay, but of course, if you're a little bit more aggressive, you're looking at a smaller time frame. We do have that early sign that the market is starting to pull back, right? Especially if you go down to like 15 minutes, you do see lower low, lower highs. Okay, so this is something that we can look out for. Aussie dollar moving forward within this week. Among the majors that we have discussed, I would say Aussie dollar over here may be one of the earlier possible opportunity that we can look out for. Okay, so what I mean by that on the lower time frame, of course, if you just drop to a 15-minute, you can see that price has started to form, low, high, and of course it takes out that low, right? So if this kind of pull back a little bit here, on the lower time frame, you can be a little bit more aggressive and start to anticipate the short side as a retracement, right? But of course, if you go back to like slightly higher time frame, like 4 hour and the hourly, it's always good to give it a little bit more confirmation, right? Which we pointed out, we'd love to see price take out the 0.6610. Kind of round a little bit is 0.66, right? So some of a psychological number as well, right? So if price can actually take that out, then the sell trade setup would start to be presenting itself. Okay, so that's on Aussie. Again, very, very clear in terms of the directional focus. It's more of just waiting for the setup to present itself. Okay. After Aussie is the dollar Canadian over here. So dollar Canadian, this is the structure we're looking at. Okay, very, very possible. Again, a simple 5-wave structure. You can see that wave tree is very, very extended. So a little tip here is if you're kind of learning about Elliott wave or would like to apply Elliott wave into your trading analysis, when you see a very strong move in a particular direction, right, and oftentimes it's kind of like also extended, very, very likely that move under Elliott wave perspective will be a wave tree, right? Because wave tree is often the strongest and the longest move. Okay, so when you look at it from a relative perspective, right? So again, clues here. This is like super extended in comparison to like this move here, right? You can see this move here. So with that, very, very quickly, we can start to project, okay, this is wave 3. And if this is going to be wave 3, then of course the very, very top where the start of this downside is going to be wave 1, wave 2, wave 3, and then, follow suit, right? Wave 4 and wave 5. Okay, and of course you can see some rules here, basically the invalidation level. So in Elliott wave, wave 4 can never come into territory of wave 1, so that's where the invalidation level is. Okay, and then of course there are some FIB key levels as well as some sort of a guidance, right? Because wave 4 often comes back towards 236, 382. Okay, now for me, would I personally look for the short-term retracement as wave 4? Unlikely, because if you can't assess the room in which we can potentially look to profit from, it's not really wide, right? Because right now the price is trading around 1.3770, right? Which is very, very close to 1.38. And then the upside here in wave 4 potentially is somewhere around 1.3890, right? So that's like only 100 pips of movement, okay, of profit potential. So it's not something very, very attractive in a way, unless you really scale it down to like 15-minute or even 5-minute time frame. Okay, so for me, for dollar Canadian as a swing trade perspective, we'll want to wait for the pullback to complete itself, then only we look for the downside, right? Which means we're looking to capitalize on the last wave, on the fifth wave down. Okay, but this is going to take some time, so I'm expecting like this week, likely the pullback will be the one developing, and then maybe going into next week, that's where we can see and look out for short-term sell, right? So that's on dollar Canadian, and then we have the dollar yen here, right? Dollar yen again is a pretty straightforward pattern structure right now that we're looking at. Okay, I think this one everyone will be very, very familiar with. It's a channel. It's a three wave of a WXY. Okay, so far price seems to be respecting this structure very, very well. And of course, we are targeting here, okay, 153.40 range. We do have a little bit of confluence on the right, sorry, on the left. But basically, we're just looking at a very simple WXY equal leg. We're looking at a channel, right, which is where the bottom of this channel is, as a potential target zone. Okay, so obviously we have a clear sense of direction, we have a clear sense of target, but you wouldn't want to be selling here, because if you sell here, your stop goes above this. Your risk reward ratio barely makes it at 1:1, right? So not something very, very attractive as well. So what we want is we want price to actually pull back. Right now, of course, does it necessarily need to 100% pull back towards 56 point? Unlikely, but often, price would do that. Okay, so that's where the key area falls. If we can get a pullback, then looking at areas here to sell, and then your stop is there, and then your target is here. You can see the risk reward makes a lot more sense. Okay, so dollar yen, that's what we're looking at. We're looking at a pullback potentially towards 155.80 to 156.1. If we can get that area, that's where the sell trade setup can comes in, right? Now, would we be looking at potential pullback towards this 155 or 156 zone? Again, if you kind of look at the potential room in which price can actually move towards, and that becomes our profit potential. It's not something very, very attractive, okay? In a way where you can see from around 154.8 right now, if you're going to look at 155.8, it's another 100 pips, right? Which not very attractive, because you're not going to capitalize on the full 100 pips, right? Because you need to wait for price to give you that sign of pushing up, right? That might take up another 50 or such, right? So you don't have a lot left. Okay. Now, of course, if today I'm going to capitalize and I would like to trade some sort of a dollar retracement, right, in terms of like dollar strength, I would say Aussie dollar would be one of the better ones, right? Because you can see the room in which it can actually potential travel makes a lot more sense as compared to other majors, right? So if I'm going to take a quote-unquote retracement trade, Aussie dollar would be one of the better ones in terms of like profit potential. Okay. Next up, right, we have gold. Okay. So gold here is pretty interesting, right? What we have is price came very, very close to the 100%, but didn't really tag it. If you ask me, I would just consider that as being tagged. Again, nothing is 100%, nothing is perfection, but it went so close that we would just basically take it as that area has been tagged. Okay. So what we are looking at right now is if this is being tagged, right? So from daily wave perspective, after WXY completion, we'll often expect some sort of a deeper pullback, right? So when I mean a deeper pullback means there's a very good chance this tree wave here, you take in the fibs, right? The tree wave here would likely pull back towards the 50% mark, okay? Now, of course, I have a little bit of invalidation level here, but I think this one can be removed, right? Because this invalidation was basically looking at this consolidation triangle. We're looking at a breakout, right? So that's where the invalidation is. Now, so with this kind of expectation, right, there is a good possibility we can see a little bit more downside for gold, right? Not really a bearish trend, but it's more of a pullback. Okay. Now, if you kind of look at it from a bigger picture perspective, right, gold has this characteristic where after an explosive move, right, after a strong momentum move, it tends to go into a consolidation, right? And if you look at historically, the pattern of its consolidation is more often than not some sort of a contracting triangle, right? This is not really very contracting, but you can see the major consolidation here is kind of a contracting triangle. Okay, so of course it's not going to be always the same, but if you do a little bit of projection and just suppose that this is the explosive move and the market eventually put in a top and then start going into a consolidation phase, there's a good possibility this will turn out into a triangle as well. Okay, now obviously it doesn't mean that we're not going to see a new high in the near term, right? But this is more of like scenario one. If gold is going to go into a consolidation phase, then likely the peak at 4,400 right now would remain a peak for some time, right? And you can kind of look into like historically how long has gold been consolidating once it goes into a consolidation phase, right? So you can see here this peak to the entire consolidation is about 60 days, right? 2 months. This one here obviously is way longer. This would takes about 120 days, so that's like almost double the time. Okay. So let's say we take an average of 60 days. Okay, so if you do a little bit of projection here from the peak that was established, 60 days will be currently close to where we are right now. Okay, give and take a little bit more. Maybe by here is 18 December, which is this week. Okay, so this week will mark that 60 days of consolidation range. Okay. Now, if you're going to average and extend this to 120, right, then of course that would bring us into next year Feb. Okay. Now, I'm not saying that we are definitely going to go into consolidation. I'm just giving you a perspective that if gold were to start its consolidation, from a psychological point of view, you just need to be a little bit patient, right? Especially if you're kind of waiting for the break to the upside. Okay. So with all that said, obviously, what we do is we will always trade what the market is telling us, right? So in this case here, at least for the short term, this is something very possible, right? And we can potentially look into selling this, right? Again, we would love to see price take out this low. Then we can start to look for short-term sell towards 4120, right? Now, if it doesn't consolidate, it's fine, because then you still want to wait for the pullback before kind of jumping into the buy, right? You don't want to be buying at the very top. Again, from a risk to reward perspective, okay? So that's on gold. Silver here, kind of similar as well, right? Where in a way, definitely bullish. So you want to wait for a pullback. Now, silver and gold, there's a slight difference in the structure, right? You can see that gold kind of go into a little bit of consolidation, but silver continue to push higher with momentum. So right now over here, if I kind of look at this low here, this can possibly be a 5-wave structure. Right? So let me just update this count a little bit. Okay, so if this is going to be a 5-wave structure, right, then of course the invalidation level will be shift towards this area. Okay, and we'll see, and I'll just do a quick measurement to show you where the 1618 is and see if we kind of completed that, right, which I think we do. Right, 1618 is here, right? So basically the price has tagged that, right? So this can be a very possible 4th wave pullback, right? So a 4th wave pullback is around 236 to 382. Okay, so just some reference point. Yeah, so wave 4 can be in development right now. Okay, so again, if you base on this projection, then I would not likely look to sell it. I'll just wait for wave 4 to be completed, meaning, look out for this area here. If price enters into that key level, then that's an opportunity to look for buy trade setup, targeting wave 5. Okay. Yeah, so that's the take on silver. Generally, I still believe that precious metal like gold and silver overall is still going to be bullish going into next year. We might go into some sort of a consolidation in the near term, but overall directional bias here is still going to be bullish on these two commodities. Okay. Crude oil continued to push lower, right? So this is the part where we are still being patient and neutral on this. Okay, price has taken out that low. Again, if you're gonna sell it, we're not gonna sell it now, right? Price has taken that low. Can it be a fake break and price just pump it back up with momentum? Possible, right? So that's something we want to be aware as well, which means you don't want to absolutely just sell it at the moment. Okay. However, if let's say going forward, maybe by the next couple of days, if this is just going to be coming back up, kind of consolidation correctively, then of course we can expect more downside on crude oil, right? But obviously, there's the fundamental forces in crude oil as well, because the production cost is there. Okay, meaning if price on crude oil actually falls below certain level, especially below the production cost, the fundamental forces of demand and supply would really kick in, right? Because if today the price in the market falls below production cost, then very naturally they will not supply crude oil, right? Because what's the reason for supplying if the market is actually asking for very low price? Doesn't make sense to produce it, right? So when that happens, then naturally supply will get cut, right? And the forces of demand and supply, if demand remains the same, supply drops, then obviously prices will go up, right? It kind of rebalances it itself, right? So when you're looking at crude oil, especially if prices comes into a very attractive level, very close to the production level, which we are, to be honest, around 50 to 55. That's very close to the production value. You might even want to consider some longer term play, not so much of trading it, but more of like positioning it, right? So that's something you can think along as well. If you're looking at commodities in general, not only crude oil, but things like, copper, wheat, if you look into like all those things, agriculture related, right? All of those have certain production costs, right? You can use this angle when price actually falls into a certain level, right? Especially if it's very low. Okay, so crude oil over here, at least from a trading perspective, if this is going to be corrective, then can we still see another drop? Yes, right? But from a longer term perspective, then you would not want to sell crude oil for the long run. Okay, so that's my take on it. S&P 500, right? Very similar to Aussie dollar, right? You can see the very strong push. We are expecting some sort of pullback to reset this, and then from there it's still bullish, right? I don't see a reason for equities to crash. Okay, so I still feel that overall equities are going to be bullish, but in the near term, nothing is going to go up all the time, right? So this is where if we can get some sort of a corrective pullback here, we might still see one more drop, then only the pushback. Okay. So if you're looking at this, to be very honest, if we are gonna get some nice little corrective pullback to the upside, okay, we might get a short-term sell trade. Okay, there might be something setting up already, because if you look at this here, okay, let me just use the other chart so that I don't overcomplicate this, right? So if you look at this here on S&P. Okay, let's just go down to the hourly. Right, we do have some of this low here. Oops. Okay, we do have some of this low here. Kind of tested, or I would say the price is testing, kind of reacting of it right now. Right, if we can get a corrective pullback, okay, and potentially taking out this high here, okay, as a potential liquidity sweep, we can look to capitalize on the short-term downside, right? Of course, this area here is where your supply block is. Okay, so something to look out for in terms of S&P 500. Okay, if you're looking at kind of like counter trend, short-term setup, right, on the S&P 500, right? So this one here, the take is if we can get a corrective pullback, okay, potential short-term sell trade target will be somewhere around 6,725 zone. right? So that's on S&P. Hang Yan, hey, we are expecting some sort of a pullback towards the downside. Okay. We'll see how this develop, right? Right now, it's a little bit volatile up and down. Ideally, we don't want this to pull back to the upside too strong, okay? We want to see a corrective pullback. Okay, so right now you can see with the 4-hour candles is huge, right? So not ideal. We are generally still expecting the price to pull back because this up move here is very, very extended. Okay, so we're kind of still expecting this to pull back towards maybe around the zone at 204. But we'll want to wait for a setup. We want to wait for more sign that price is likely going to come down, right? Because right now we don't really have that at this wall, right? Especially after this 2 candles is developing. Okay, so we'll just give it time. We'll see, you know, another 2 days, maybe by Thursday, we'll see how things have been developed. Aussie yen. So Aussie yen is basically very, very similar to Aussie dollar. I mean, they have the Aussie in it, right? So this one here, basically, we are looking at possible pullback to the downside, right? So if I can extend this a bit. Okay, we're looking at price potentially doing a very, very simple 3-wave pullback towards 101.88 or 101.90. So any corrective pullback here can potentially be seen as a short-term sell, right? Which is kind of pretty aligned with the Aussie here. So of course, if you're looking at Aussie dollar and then you're also looking at Aussie yen, then bear in mind of your risk exposure in Aussie. Both have the similar direction here. We're looking to sell. So factor that as part of your risk management, right? Okay, then we have pound odd, right? So pound odd has came back towards the key zone at the moment. Okay, so we want to see how price is going to react off this zone, right? What we'll love to see here is for price to actually either one, slow down around this area and then give us an impulsive drop, right? That itself will build us into a potential setup to take it to the downside. Okay. Now, if we don't get that, and let's say price just decide to drop down impulsively over here, that's perfectly fine as well. But ideally, we want price to take out some sort of a minor low. And then we'll wait for the pullback, and then we can also look for the sell. Okay. So either of this scenario will give us an opportunity to look for a sell. Now, if we don't get either of that, and let's say market just pulls back correctively over here, that's not going to be a sell because that means that potentially we are going to bake into a more complex corrective structure. Maybe this will go back up, and then this will form into more of a channel structure, right? Yeah, so that's something you want to observe, right? How price is going to react off this key level. Okay, so as mentioned, ideally, we're either going to see it slowing down in this area or we're going to see some sort of an impulsive drop to the downside from this area. That will be ideal because that will build us a potential setup going forward, right? And personally, I'm looking more of the downside from here. Okay, then we have BTC. So BTC here from a count perspective and structure perspective, we are generally bearish right now. Okay, from a trading point of view. So we are looking at wave 4 being completed over here, right? Price came down, took out that trend line. So short term, if you can get a corrective pullback towards 89,900 to 91,000 range, that would present an opportunity that way, you know, if you're kind of trading the crypto potentially to the downside, right? If I bring you to the daily time frame, this is what we're looking at, right? So this is where the key zone is around 77,000, right? And you can see this is a very, very strong momentum push to the downside, right? So that is where the wave 3 is, internal wave 4, and of course, we're expecting wave 5 in development. Okay, so that's on Bitcoin side. I'm not actively trading the crypto, okay? Just sharing with you the crypto environment, more specifically on Bitcoin if you're into that. Okay, good. So that's generally what I have as of today, right, as I mentioned at the very start, I think generally the market for this month so far has been a little bit slow. But of course, we understand there are multiple factors. Number one is going into end of the year. Markets are often generally a little bit slower. And number two, we have like U.S. government shutdown earlier as well. So that might have also impacted the market a little bit. Okay. So obviously we want to be a little bit patient during this period of time, right? And not just like force something in if there's really no setups available. Okay. So with that said, let's take a look at the questions, and of course, I'll do my very best to answer as many as we can. Okay. So Joseph here has a question on: do you think there's a decent Euro franc short setup at the moment, right? So let's take a look at the Euro franc chart. Okay. Okay. So of course, depending, number one, questions like that would need some context, right? Like what time frame you're looking at, what are some of the criterias that you need in order for you to kind of take a sell, or what are the criterias would you then consider to be a sell, right? So of course, without all those information, I'll just base on a couple of like approaches that I use, right? Basically from a 4-hour to a 1-hour perspective, right, on Euro franc. Now, the first thing that stand out to me here is very, very obvious. This can be a potential kind of head and shoulder pattern, right? I mean potential because this neckline hasn't been broken, but this can serve as a right shoulder, as an early projection, anticipation that this would happen, and then, we'll probably look for that. Another aspect I'm looking at, obviously, is some of the key areas, right? Like this here would serve as a very, very decent area where, so if today, right, this is going to be a head and shoulder pattern, this can be something like this as well, right? So kind of putting things into perspective, right? So the thing here is, obviously we don't need to project too far into the future, right? We just need to look at it from this angle here and say, okay, would we have a possible sell side, right? So I think that's the question that you may have, right? So for me, it's pretty clear. I mean, for me, myself, I know what I want to see for a sell setup. There are a couple of development that I would say give confluences to that sell. Number one is you can see that this pullback here is generally very corrective in nature, which is great. We do have, in terms of SMC model, we do have a little bit of an order block here. Yes, the market has tested a little bit, but we do have that as an order block. We do have the aspect where the market actually took out some of this high here, or even this high here, and then kind of reverse, right? So from SMC perspective, that's what we call a liquidity sweep. Okay. And of course, in this move here, you can see it carries a little bit of momentum. We have a little bit of fair value gap here on the hourly. Okay, going back on the 4-hour time frame, we have that 4-hour momentum candle as well, right? So these are elements that strengthen the case of a sell, right? So of course, there are multiple different setups details, right? Now for me here is I use the simple 67. Right, it came very, very close, but haven't really tagged it. We have that confluence of the order block here, right? So if you ask me, this can be a valid sell trade setup, right? So you can see the perspective we have, right? It's not just about one specific thing, but it's a couple of things adding up together. Even from a higher time frame, we understand that, okay, potentially this can be a right shoulder. Okay, yeah. So that's my take on the Euro franc, right? Potentially, if you're looking at the sell setup, those are the factors that I would consider. Okay, another follow-up question I see here in the chat is more of a general question, but why do you prefer to focus mostly on the FX side? Are the setups more consistent there? I wouldn't say that's the reason, but personally, it's just a preference because I don't really trade the indices. I mean, I started off with FX, right? So that's the part where it has been the one asset that I started with, and all this while I've been very, very comfortable with it, right? It provides sufficient volatility and liquidity as well. And it's generally 24/7 or in way 24/5, right? Meaning you can actually put in your orders anytime. You can actually execute your orders anytime, which is great, right? Because if today you do like stock equities, CFDs, you really need to wait for market open, right? Even for indices, sometimes it's not 24 hours. So that's some of the reasons as to why I'm still very much, focusing on the FX side of things. But I do touch a little bit on equities here and there. Not so much of trading, but more of like, another approach towards it, like longer term investment and dividend aspect of it. Right? Good. Okay, so let's just see. Okay, Sunar Joe here has a question. Is there any rule for wave 2? Sometimes wave 2 almost reached the high of wave 1. Is it valid for wave 2? Okay, good question over here. I would say, in Elliott wave perspective, the rules very, very specifically state that. Okay, sorry, not this drawing. The rules very, very specifically state that if this here is your wave 1, right? Just assume this is a pullback. This pullback can come as deep as 90%, right? But as long as it doesn't take out this high, technically it's still a valid wave 2. Okay, because the rules simply state that it cannot break it, right? But obviously in actual markets, right, seldom will see some sort of a 90% pullback, right? Because when the market is so close towards this level, oftentimes you just see it break it, or you even do a fake break. Okay, so to me, a decent wave 2 should never pull back too deep, right? Because if the market really pulls back so deep towards your initial starting point, then it's also telling you that maybe the momentum is not yet ready to go higher or things like that, right? So theoretically, it's valid, but from a practical perspective, if you see a very, very deep wave 2, then that's not something that I'm very comfortable and confident in anyway. All right. Okay. Kelvin here has a question on Ethereum. So let's take a look at that. Okay, this Ethereum futures, right? So maybe I'll just change to okay, I'll just take the spot market. Okay, so let's start off with the 4-hour perspective. Zooming out a little bit. Okay, so one thing that stands out to me, at least from this perspective first, is that this little corrective move here, right? Now, I don't think this has broken out yet, right? Just to be a little bit more specific, if I'm going to put in the channel trend line, yeah, it hasn't really broken it, right? But this structure is definitely corrective in nature, right? So what we are always expecting when we see something like that is the minimum expectation is for price to take out that low. Right? Now, whether we're going to see a double bottom construction and then the price push up, or this is just going to keep going down, we'll need to see how price is going to react when it comes here, right? If it does that. Okay. So in either case, this would be a very, very clear, immediate structure that I would see, right? Which is the pattern here is very, very corrective. And we are kind of expecting downside. Okay. So if I zoom in a little bit, then what we want to see moving forward from here is that we want to see some sort of a corrective pullback internally. That would increase the odds that, yeah, price would likely continue lower. Okay. So again, if you go down to even smaller or zoom in kind of perspective, right, you can see lower low, lower high, very, very clean structure. From a 1-hour time frame, then obviously this will be an invalidation. You have huge momentum here. Okay, so the thing is, of course, if you're looking at a structure setup, okay, depending on which model you're looking at, but from an SMC perspective, based on the setup that I look at, we have a very nice little confluence here of a fair value gap. We have our FIB confluence there. Okay, now obviously we want to wait for some sort of a corrective pullback. We don't want the price to just pull back too quickly. Then we can look to sell it all the way down. All right. Now, of course, you can have multiple targets like TP1, TP2, right? So it's very, very clean. I think right now Ethereum structure here is super clean. Okay, it's just that it's not something I look at, right? But for those of you who are interested into Ethereum, this is something you can consider adding into your watch list. Okay, Kevin asked about dollar Swiss franc. Let's take a look at that. Okay, good. Okay, for our time frame perspective, it does seems like this is going into some sort of a consolidation, right? So short term, you can see this pattern is very, very similar to what we just talked about in Ethereum, right? So there's a good possibility short term this can come back down, and then whether this will pop, we'll need to see after price breaks this, right? So something food for thought for you guys as well, right? Because a lot of times we see in isolation, right? We see this pattern, we say that, oh, it's gonna down, it's gonna probably go down, right? Higher chance it's gonna go down. Not wrong if you look at this pattern in isolation, but if you put things into context, you realize that, okay, let me just copy and paste this trend line, right? If you look at things in context, right, you want to ask yourself, today, if you're going to sell this, do you have a lot of room for price to travel, right? Because if this just going to pop it down here and then start reversing just like all this pattern, okay, then you want to ask yourself your question again, is it worth actually taking the trade? Is it worth putting risk into the markets, right, for that move, okay? If you ask me personally, that's not something I would very, very much eager to take because the context here is that we are already very close to the bottom, right? Now, if I just say, okay, if you just imagine this pattern here occurs somewhere at the top, right? Or like somewhere in the middle of this entire consolidation phase, right? Then that's a very, very different thing because you can see this has more room, right? Way significant more room to travel as compared to this, right? So that's an additional aspect of context that you might want to look into. Food for thought for you guys as well, right? So that's my take on dollar franc. Okay, Irene asked about GBP CHF. Let's take a look at that. Okay, this seems to be popping up quite a bit. So pound franc, now this one here quite similar to, I can't really recall exactly which instrument, but we did talk about one where this can potentially turn into a head and shoulder pattern, right? Okay, so again, some projection doesn't necessarily mean it's 100% going to be head and shoulder, but we have a little bit of clue there. The only one thing I'm looking that I'm not really liking it, at least from a forward time frame, is that this drop looks impulsive, but there is no fair value gap in this process, right? There's no strong one huge candle kind of momentum push, which I'm just not very comfortable because if there is, then this anticipation of a potential kind of head and shoulder pattern would be, I'm more convicted to that, right? But we are lacking that momentum push. So yeah, I'm a little bit cautious on this because oftentimes what this pattern can evolve into is that this can continue to go higher and break that top and then only start coming down, right? Because then this would turn into a potential diagonal structure. Okay, so this is something that I would be careful. So this looks a little bit more of an expanding, right? Expanding kind of diagonal. So this is something I will be a little bit more careful with, right? Case in point is if you look at pound yen, right? So you can see this is very, very similar, right? Over here, I mean, not exactly the same, but before this happens, right? This can be a potential head and shoulder pattern, right? And then, of course, we're still expecting that. And then what happens is the market then evolve into a diagonalish kind of structure. Okay. So what I'm looking at on pound franc as of now, I will be just a little bit cautious to project it as a head and shoulder, but potentially more of, turning into maybe a diagonal structure. Okay, so not the clearest, not something I'm very comfortable with. Okay. Good. So I see Calvin here has two other pairs on Pound Cat and Euro Cat, right? Okay, I think Pound Cat and Euro Cat would likely be very similar overall because they're correlated. But Pound Cat here is quite clean. Okay, I mean from this scale we can very clearly see like this is a momentum, right? So there is that fair value gap created. What is ideal about this is that we have this liquidity sweep as well, right? Which means kind of like taking out that previous high and then immediately almost reverses. Okay, even at this scale, we can consider to look at the setup where if price were to pull back towards the 767 level, we can look to take this trade down. Okay, now the only thing here is, of course, you don't want to be overly aggressive in your take profit level. You can see that this area has been tested a couple of times. So if I'm going to take this trade, the target would likely very much be just at the previous low, okay, which is 1.8375, 1.8380. And then, of course, you just need to make that assessment if you're going to take this trade here. Risk to reward ratio obviously makes sense, right? Because this is going to be giving you 1:2. But of course, depending on your setup, right? If today you can kind of look into a smaller time frame and make your entry a little bit more precise with a tighter stop, then the risk reward obviously can increase significantly as well, right? But in general, I think this is gonna be the look at it, right? If market can pull back towards the key area at 1.8570, that is definitely some areas that can look to sell it, okay, with of course the invalidation at this very top. Okay, so this is on Euro Canadian. If you look at, this is on Pound Cat. Okay, this is on Pound Cat. If you look at Euro Canadian, a little bit similar, but of course there's a slight difference where Pound Cat did not break that previous low, but you can see that this actually took it out, right? So let me just zoom out a little bit here. Okay, great. This one here, I would say have the possible or the room to the downside is a little bit bigger. In a way, okay, generally this is more or less the same, right? We have this here. You take your FIB from high to low. You have that confluence there. Generally, it's more or less the same. Okay. Now I feel that the difference here is that this forms kind of a lower low, lower high structure, which potentially can actually have a little bit more downside as compared to the Pound Canadian. Okay, so something like that. Okay, which would typically still respect the slope. All right. So if you look at the comparison between these two, you can see, right, this is more of like a rectangle structure, whereas the Euro Canadian has more of a channel structure, lower low, lower high. Okay. So both are very similar. I wouldn't obviously suggest you take a full position on both, right? Because of the correlation. If you're looking at both of this, then probably you want to understand your exposure on the Canadian side, and both of these are very much correlated. Maybe you pick one, or maybe you kind of reduce your position sizing, and then you trade both, right? With Pound Cat going for a typical target one, and then maybe Euro Canadian, you can aim for an extended target. Okay, and then you can manage your trade along that way. Yeah, so that's my take if I'm gonna look at this too. Okay, which to be honest is pretty great, right? It's just that it's not in my watch list, it's not in my typical, daily routine, right? A lot of all these pairs, which as I mentioned at the start again, those that I'm watching mostly have the dollar in it. Doesn't really present a lot of clear opportunities, but things that you guys bring up over here seems to be having some decent, clearer structure, right? So obviously, hopefully, even I don't trade this, right? Hopefully, as you look at your own instruments, you look at your own, preference choice of asset, the principles can also be applied, and then that also opens up more opportunities for you guys as well. Okay. So great. I hope so far so good. Oh, I see one more question over here. From Sunajo, right? For ETH, is it already making a 5 wave or if it's still making a 4th wave, right? So I think let's go back to ETH. Okay, if we look at this here, right, I think very quickly I would put it in something like that. This would probably be wave 3 and wave 5 in development. Okay. This aspect here obviously would argue that it internally doesn't look like a 5-wave structure. Okay. But for me, this move here to this move here is obviously longer than all other move, right? So I would put this as 3, right? Again, whether this is 1 here or this is 1 here, I wouldn't be too concerned over that, right? Because at the end of the day, the outcome of the analysis will be more or less the same, right? Because I can easily put 1 here, 2 here, and then everything would still follow through. This is still 3. This is potentially still 4. Okay. And then of course you have your nested like 1, 2, 1, 2, etc. Right? So I'm not too concerned over that part. It's more of like if this is gonna be the pattern itself, I think is more important, right? So this is very corrective, and wave 5 would likely be in development. Cool. Right. So generally, that's all from my side for today. Very great. Great to see a lot of like interaction from you guys as well, and hopefully today's session does help, right? As well as provide you guys the insights for the week. Okay. So all the best, and of course, reminder to always manage your risks, and trade your plan. Okay. So with that, I'll see you guys in our next session. Okay. Good night.